back. Time to talk to Patrick Morris now. He is Senior Managing Partner at HAGIN Capital here in New York City. Mr. Morris, nice to see you. Thank you for joining us today. So it's the last day of the week and pretty much the last few weeks of the decade. We'll get your outlook on 2010 in just a moment. The sort of big stories of the week. So today we've got these pretty spectacular tech earnings. Is this a good sign for technology on the whole, the fact that customers, at least in the U.S., are spending on technology again?
It's hard to know exactly what they're going to be buying in technology. I think it's obviously a good sign for electronic devices, for, the consumer is definitely buying some things, but I think there's going to be a lot of differentiation between the consumer electronics companies.
Okay. Now, the other big story today, this week, has been financials. Are they going to run out of steam in the new year? Do you think today the European Central Bank says they're raising estimates on write-downs for the Eurozone banks because of their exposure to the commercial property market? We don't talk about the commercial property market a lot here, but perhaps that is still something that is unwinding, and maybe we need to worry about it?
Well, I think commercial rates are actually down quite a bit, very dramatically over the last few years. I'm not sure exactly because they don't give you a lot of clarity on the future. There might be some decent headline rentals out there, but they're coming with 1 year, 2 years of free rent. They're coming with big build-out budgets. So I think, you have to worry that there might be some kind of a commercial
But in terms of the
collapse
banks, are these banks healthy because they're being able to pay back top, or is that why they're being able to return all this money?
The stock price on one of the largest banks in the U.S. is not reflecting a particularly positive outlook, nor was the equity offering received very well by the market.
Okay. The other story, gold, is it looking like a bubble? Is this the ultimate collapse that some people were calling for?
Well, I think people got a little overly enthusiastic about gold. I don't know if this is the beginning of a collapse, but technically it is a little more confusing now, the chart. It was going straight up. Now it's taking a little bit of a pause. One of the nice things about a bubble, though, is you're always in the camp of calling it over too early. So I think we could see another big run-up in gold. Certainly if you see some trouble with the banks in the U.S., people will get a little worried again and maybe flee to that asset. But I just don't think it's a sustainable trend.
Another big run-up in crude also, do you think?
Well, crude's run a little bit. It's heavily linked to the dollar, at least in the near term, though there are some rumblings about maybe how they want to get off of just dollar-based transactions. But I think you saw pretty good GDP numbers out of India. You see good GDP numbers out of China. There's a lot of industrial manufacturing there, and they're both relatively crude-poor countries with huge populations. So the crude's got to come from somewhere, and probably at a higher price. Okay.
How are you looking at the U.S. markets going into the new year? In a note today, you said that you're getting a little more defensive. Why is that?
Well, I think that, if you see interest rates rising, that is going to slow things down. I think sort of globally interest rates are going to rise just to try to hold back any possibility of a hyperinflationary type of cycle here upcoming. One of the things we debate quite a bit is there could be a giant cycle, a 20 to 25-year cycle coming out of deflation and into inflationary or hyperinflationary period here for the next, who knows, 20 to 25 years. So, I think you see interest rates definitely climb here.
Okay. Now, when the Fed does start, when their exit strategies start gathering steam, will it spook the markets?
I think it will spook the markets. I think that it's been very sort of quiet, peaceful, tepid. It's been a good year in equity markets. It's actually been a decent year for treasuries, not bad. Everything is sort of a little too quiet, It's almost frighteningly quiet out there right now. So, yeah, I think it will spook the markets pretty badly.
Okay. Will anything spook the Indian markets, the emerging markets? Do you think, what's the greatest challenge there? Food price inflation?
I think core food price inflation. I think the government in India has the problem that there are a lot of folks who really rely on those food prices staying relatively low. So the economy is growing very quickly, the industrial economy is growing very quickly, but prices for core products are also climbing very quickly. So you can either fight that by raising the overall standard of living of everyone in a giant country, or you may have to intervene and hold food prices artificially low. You can only do that for so long, though.
Okay. Your favorite investments for the new year?
Sectors, yeah. I think that things to watch, I think, if you believe that India and China can grow without the U.S. growing rapidly, then you have to watch materials, you have to watch the energy sector very closely, both here and abroad. I think you want to be a little defensive, though. Look towards staples, look for quality companies. They're not really exciting to invest in, but they do what they do well, and they do it consistently.
Okay, great. Thanks for joining us.
Thank you.